Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, co-founder of LikeFolio. Thanks for joining us today, Landon.
Thanks, Tom. Good to be here.
All right. So Nike shares down 34% so far this year. Hit an all-time high last November, about $179 a share. Landon, I was at a graduation party this weekend, and every kid that was between the ages of about 12 and about 25 had a pair of Nikes on, high tops. They're back in, but what kind of data are you seeing? I know you guys don't cover a lot of the data out of China. It's mostly U.S. based, but are you seeing positive signs here? Because it seems like, Nike is that brand. It's always in the top 10 of surveys that millennials, younger generation, always goes to. Is the data supporting that?
Yeah, I mean, this is iconic brand, right? I have a son who's just Nike'd out to the max, so yeah. I'm very aware of all the popularity of this brand. You see it everywhere. So any negative spin I'm going to have today is not going to be long term. I mean, this is a very strong company. But when you look at the stock, you talked about it was around 180. Now it's down to 110. It's still above the pre-pandemic levels, which is kind of wild. It was around 90 right before the short crash of March 2020. So we're still up there. It maybe just got a little bit ahead of itself, and now it's pulling back with all the macro concerns. But when you look at it overall, I think it's pulling back a little bit. The data says that everything's kind of pulling back. The only thing that's really positive is the movement in happiness. The happiness has gone up about 10 points over the last little while, and that's very strong. But when we look at the direct-to-consumer mentions, people talking about just shopping directly with Nike, which is a big focus for them. Last quarter they reported that being up 15% year over year, and our data supports that number. Now, however, though, that number is actually pulling back quite a bit. So they had a huge run in direct-to-consumer, as you can see, but we've seen that it's sort of topping out a little bit and pulling back. So not as many people are talking about going direct to Nike for their merchandise. And overall, if you look at just total purchase intent, it's actually not doing extremely well either. It's a little bit flat over the last little bit. I think the stock has sort of caught up to the levels of purchase intent being low. Now, when you compare that to some of its competitors, one that stands out, for example, is Under Armour, doing much better than Nike. But back to this chart real quick, you can see huge run up right after the pandemic, kind of back down towards lower levels, and the stock, I think, got a little ahead of itself, and that's why it's pulled back. So the purchase intent is not extremely high, sort of solid, sideways, a little bit down, perhaps. I think it's down about 5% on a year-over-year basis, where, again, the competitor Under Armour's up about 6 points on a year-over-year basis. Lulu, not necessarily a direct competitor, but you got to include them, up 25% on a year-over-year basis. And they just reported a few weeks ago a huge revenue boost year-over-year, 32%. Again, kind of lining up with our data, but I think that could skew investors in a more bullish than deserved outlook on Nike if they think that Nike's going the way of Lulu. I don't think that Nike's going to have the same success as Lulu did in the last report. And right now, we've actually got Nike sitting at an earnings score of -32. So not ridiculously bearish, but firmly cautiously bearish based on some of the metrics that we see, not only in happiness, although improving, still lagging, but mostly in purchase intent and that direct-to-consumer sort of pulling back a little bit.
Landon, the one thing that sticks out at me that's surprising on your data is Under Armour's good numbers in terms of the purchase intent versus sentiment, because most of the headlines, most of the news stories about Under Armour have been very negative, replacing a CEO who came in not very long ago, which tells, I think, the world that what they're doing isn't working. Their numbers continue to shrink and go down, even though, full disclosure, I kind of prefer Under Armour in terms of apparel, but Nike, the iconic brand that is Nike, isn't going anywhere. Here's my question, though, Landon. When you look at what's going on, the one thing that jumps out at me is something you already mentioned. Under Armour seems to be dropping off slightly. Now, your data says slightly different, that they're doing better. But Lululemon's numbers in a quarter that was supposed to be poor were pretty shockingly good. So I mean, I think there's a lot of confusion coming out about this. I think this stock that's getting down here now to a PE that's pretty historically low for them, the question is, what are they going to do about inflation? And, remember, inflation takes spending power away from consumers. Are they going to get hurt by that? Has the stock already, and this is the bigger question, has the stock already discounted all that bad news? What is this company doing? Direct to consumer is doing extremely well. I mean, I think that is a big positive for margins and things like that. Is this stock, has it gone far enough, Landon? Or your data, it seems to hint at more negativity. Does that necessarily mean it's negative for the stock price as well, Landon?
Right. I think that's the trick, right? Reading investors' minds is very difficult. You have to assume that looking at Lulu has influenced Nike investors. It's not the same company, very different, but they're in the same sector. And you think, well, if they can have a huge revenue boost year over year, maybe Nike can as well. And of course, the direct to consumer it's the story that drives, I think, Nike, because you're going to get better margins, and it's just a more efficient business model. But as I said, our data is showing that direct to consumer is slowing down. I think there's concern with rising inventory, which could be, with inflation, could also lead to lower margins. All those things are going to be kind of big no-nos on a call, right? Things you don't want to talk about, but you have to if they're there. So I do think it has, obviously you go from 180 down to 110. There's a lot of lowered expectations, but I don't think 180 was right. 179, I think that was, everything got overextended, overstretched. You invest in anything and you couldn't lose. This is a few months ago, right? 6 months ago, nothing was going down. So everything got extended. I don't know what the true value of Nike was when it was priced at 179. It probably should have been 140 or so, but now 110, it's still above where it was a couple of years ago before the pandemic, and they've kind of weathered that fairly well, especially considering a lot of their production's in China and they've got shutdowns there. So I would say that given everything that we've seen, I'm a little bit concerned on the short term. Long term, I love it. You talk about a really low PE ratio. For me, if someone's asking, should I buy Nike before this report? My answer is, if you want to be an investor of Nike, I would be more likely to wait until after the report. I think they're slightly more likely to go down on this report than to go up. I don't think that they're going to crash. I don't think they're going to go crazy either direction. I just think they're a little bit more likely to go down based on some of the stuff that we're seeing. But some of the macro trends are going their way. For the first time in a while, we're seeing working out at home down and joining a new membership up. So things are moving back into the normal direction where people go to gyms instead of working out at home. And if you're going to a gym, you got to look the part, you got to have all the gear. So Nike's going to benefit from that. Overall, I think that this is a very short-term call from LikeFolio at -32 earnings score. Maybe it's just a little bit lower tomorrow, and that's where you want to pick up shares if you like this company long-term.
Yeah, I kind of like that outlook there that you gave us here, Landon. Even if it's a good report and the stock goes up, at least you'll get some clarity on what's going on at the company as far as demand and some of the issues that they have over in China. But I just thought it was interesting. You've got a -32 score going into earnings for this company. But the consumer purchase intent mentions chart that you had where, you guys were always really positive on Nike. And then that came to fruition when yours started downturning. The stock was still going up. Now we're back to where their sentiment's going down, but the stock price is still above that median line there. Is that the potential for more downside based on your data?
Yeah, so it's kind of crazy. I mean, a lot of times we look at how forward-looking is our purchase intent, and how far can it predict? And I think it really depends on the type of company. For a retail company like this, you would expect it to be a shorter time frame. But again, I think a lot of these valuations just got way overstretched and way outdone. A few months ago when Nike was trading 179 or so, I think it was just too high. But as things are going up, it's hard to short. It's hard to get out because it just keeps going up every day. Now we're in a position where the market and the world has kind of got a reality check, especially with inflation, what it's doing. Everything's slowing down, and so you find yourself thinking, well, is Nike a value here? Are they still doing well? And I think the long-term answer, Kevin, as you talked about, this is an iconic company. They're not going anywhere. They're only doing things that establish their dominance more and more over time. But if you're thinking short term, and you have to because they report today, do you want to be in before or after this report? My answer is I think you might want to wait, maybe even sell some puts, and that's your way to get into it for a little bit cheaper. So that's the way I would look at it. You look at last quarter, we were plus 37 on them. They beat revenue expenses. The stock was plus 2.2%. So we got that one right. I'm not saying we're guaranteed to get this one right, but we've got a good history with Nike, and at negative 32, I'm more comfortable waiting until tomorrow to get in long than I am going into this report.
All right, great stuff. As always, Landon, breaking down the data for us on Nike into those earnings. I think this is going to be a big one, and guidance and those numbers out of China are going to be, at the forefront of what's on investors' minds. All right, Landon, great stuff. Have a great day.
Take care.
All right, that's Landon Swan, co-founder of LikeFolio.